What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be looking at Tesla's chart. We're going to look at where price came from last week, where price ended on Friday, and where price is likely to head into next week. So don't forget to check out the description below. There's some links to my socials, Discord, merchandise shop, some other stuff. We're rapidly gaining new subscribers on our YouTube, and we're only about 150 or so away from giving away some Rawstocks merchandise. So be on the lookout for a video to come out when we hit up 500 subscribers that will talk about how you can potentially be that winner of the Rawstocks merchandise. So today we're looking at Tesla's chart. We got it pulled up here. We're on the daily time frame. And this is the same chart we've been watching and monitoring over the last couple weeks. Okay, our purple zones here are consolidation zones on lower time frame charts. We have a bullish parallel channel. We also have a bearish wedgish kind of sort of thing from this low to this low as support, and our resistance levels up here from this high and this high. And then we have the current kind of channel that we're in, anchored to this high and roughly the high from Wednesday, and then our lows from October 31st, so end of the month low last month, and then November 10th as being our next low. So let's see what we tried to do over last week. We came down and we set that low last Friday, and we just kind of rallied up from there. We set that high on Wednesday, and then we sold off into Friday. Ultimately, we found a little bit of a bounce on Friday, found ourselves right back into that consolidation range. No surprise there. We were looking for 226, which we did hit on Friday, and then found that rebound and again ending up in our zone. So where are we at inside this channel? We are still in the upper half of that channel. And so what that tells me is that we could potentially, no guarantees, but we could potentially see, because we closed above that, we could see us rally and test that high, and then test again that parallel channel resistance, which would also intersect with our resistance line that is in that downtrend, and then potentially from that point, see if we can catch a rejection that would bring us down to test the channel bottom. Okay, so that's one potential thing that could happen. If that happened, we would then be swiping the liquidity here, be coming down, we'd be clearing this resistance range, potentially, and then hitting that support level down below. Now, there's also the potential that even though we closed here, that we continue to sell down into this consolidation range and we test that channel support before we ultimately see if we can rally again and test that that resistance line on the channel. Now, if at any point in time we're trading down and we give it up, there's the potential for this consolidation range here, taking the low, and then we'd be looking to see if this support level continued to hold. If it didn't hold, we'd be coming all the way down to this support level of the overall kind of bearish wedge, if you will. It's not super wedgy, but it's also not a channel. So we'd be looking at the support level, and over time, if that happened, we could see us below 190, potentially down into the 180s. Okay, so things that we'll be watching for as price continues to give us direction and tell us where it's going. Let's go ahead and drop down into the 4-hour chart. Again, we can see we found support on that median of this channel, caught a bounce, ended up having a nice candle that still traded down into the below consolidation range and rebounded very hard and fast on Friday. And then we ended up again closing above that median in this consolidation range into Friday. So Monday we'll be looking for accumulation of the smart money in the direction that it plans to go throughout the rest of the week. Tuesday we'll potentially be looking for manipulation to see if it occurs. And then Wednesday, Thursday, we're looking for distribution and either a reversal or continued distribution. Now, this week didn't quite play out the way I expected. According to the quarterly theory, we did see a large range Monday. We did not really catch any true manipulation. We just kind of caught some distribution to the upside. But Wednesday into Thursday, we did see a reversal. And then Friday, we kind of saw a reset of this high and this low, where we ended up somewhere in and around the 50% of this high to low here. So that would be considered our reset day, and we kind of saw minor consolidation into the end of the day. So we'll see if Monday gives us another wide range like this, but on Monday's wide range or short range, small range, if you look at just Monday, you could say that either the first 4 hour, you could trade that candle and look for a breakout above or below, or trade the inside range of a 4 hour candle, or you could also just not trade Monday, look for the daily range, and then look to trade a breakout or a breakdown going into Tuesday. So a couple different ways you can trade Monday's range if you're looking to trade early on in the week. You can also wait until you see either confirmation of a manipulation, or waiting all the way till Wednesday to potentially catch the distribution leg as well. So there's our 4 hour chart. Again, we have our levels. We have a lot of different levels going on here as well. Not only do we have the consolidation ranges, but we actually, let's see, we took out that level. We did not close this fair value gap on the 4 hour chart, so that's going to be important that we held that, because we went away from it, we came back down into it, and we found a bounce inside of that. But we're not in the clear yet. We haven't closed it. Could easily come back and take that out. Another large fair value gap right here. Okay, that's 221.80 down to 216.81. We have not come back down to test that fair value gap. So again, that's part of why I think either we had higher then lower, or we had lower first to come and test this fair value gap here, because we've driven away from it. Now we'll come back down into it. So that is going to be something that I want to have on my chart here. And that was a bullish fair value gap, and we already have the level right there. Okay, so this bullish fair value gap, and if it helps you remember, you can throw a magnet in it. Okay, because price is going to want to draw back down into that fair value gap before it makes a decision to either close it or head higher. And again, that's right near where our support line is. So if it came back down quickly, might see a bounce, a bounce and a test of the support, and then a rally higher from there. If it went higher first, we might just come back down to close it and then rally up from there. So we'll be watching that fair value gap as well. If we drop into the 1 hour chart, 1 hour chart just shows us, more or less a straight sell-off. We did not have any clear indication that there was a smart money reversal. I didn't see any kind of return to optimal trade entry. And so if you were catching this, it was just a straight reversal off the top. This 1 hour candle was one that I called out in the Discord, that I said that is our first identity, or our first indication that there was some bearish activity. So if you look at this entire move up, we had that early run on stops. Okay, we had this where we started to trade up. We had a nice candle. We ran the stops, ran on liquidity, cleared it out, and then we just kind of ripped from there. We did have one bearish candle here on a 1 hour time frame, had a small correction here, but it was just running a test on this breakout candle. Okay, and then we came up and we got a nice bearish candle there. So that was, again, the first kind of clear indication that I had that we were maybe going to see some bearish activity. And then sure enough, we did sell off. But again, no smart money reversal in this. And so that is a little bit suspect that we didn't have that as far as an indication to go short. And we could say that here to here, we did get back up, I suppose. If you look from that high, we came back there. We did get to the 61.8. So that could have been an entry point if you were looking to go short on this bearish activity, that you could have grabbed that reversal back up to the golden pocket and entered your short position. That's your low risk entry, your low risk smart money entry. And so let's look at what that would have looked like if you were going short in that Fibonacci level. You're setting your high just right above the previous high. You're setting your low at bare minimum at your liquidity target, which right here we have this wick low. And so that would have ended up being a 2.5 to 8. If you only took it to the 0 fib, which is kind of the easy trade, you grab it at the fib level, and then you trade it to 0. You got a 1.41 RVR. If you traded it to the liquidity level, you got a 2.8. If you traded it to full symmetrical swing, you got a 3.7. And so all of them pretty good. They're all better than a 1-to-1. So it's a low risk entry to trade those fib retracements. So then again, looking at the 15-minute chart, just shows us a lot of what was going on during the week. Again, we had that, low to fib retracement. Could have entered in the short. And again, even if you traded longer, we were looking at this consolidation range. So maybe you held it a little bit longer from instead of this liquidity level here, you were looking for the consolidation range. We took the liquidity, we ended up in the consolidation range. So all of them would have worked out well. And then again, we dumped down. We were really looking for that 226 mark, which is a low here, which we didn't quite take the low. But we also had this liquidity range where we just dumped right down into it. And then we found a really strong bounce off of that, which was kind of unexpected. I didn't expect us to get quite such a run. I was looking for one more deliver down. Especially wasn't expecting it because on the 15-minute chart, although that was a strong candle, it did not take this candle all the way out in one candle. And so I was expecting that we would see it roll back over, try to run one more time into this consolidation range, and then see a bounce. So I did get caught a little bit in that, but you win some, you lose some. But did deliver down to that 226 point that we were looking for Wednesday, Tuesday, Wednesday, Thursday, something like that. And then again, we closed above the median. We closed right around that consolidation range. So if we head higher, we have our buy side liquidity here. We have our buy side liquidity here. Okay, so rally up 240, rally up 246, even higher, the intersection between this support, this resistance, and the 250 area. If we start trading down early into the week, we have our median of the channel. We have our consolidation range low of 230. We have our previous low sell side liquidity at 226.50. We have our consolidation range low at 222.83. And then we have our fair value gap 221.71 all the way down to 216.73. Then we have our rising channel bottom, which should offer support at least on the first time, if not longer than that. And again, that's rising, so it could be anywhere, heading into Monday at 214, 215, all the way up as we get further into the week, closer to 218. So we'll just have to see when and if price starts trading down that way. But we have our levels, we have our zones. And we know what to look for no matter if price is heading up or it's heading down. So hope this has been helpful for you guys. Again, don't forget to smash a like, subscribe, share with all your friends. Help us get to 500 subscribers because I'm really itching to give away some Rawstocks merchandise. Again, links are in the description below. Don't forget to check it out. I'll see you guys on the next one.